there's a third point of contention, which is perhaps even more, irritable for both sides, and that is the government wants Reserve Bank to part with its capital. It believes that it is overcapitalized, and there have been several studies on this even during your time. Do you think that that's a legitimate contention? Should the Reserve Bank give in part of the way, part of the capital? What's the way to find meeting ground? Because there doesn't seem to be any.
Yeah. Look, this is a contentious issue and sometimes a poorly understood issue. So let me try and explain a little bit. One, the Reserve Bank's equity is a wholly owned asset of the government of India. It doesn't belong to the Reserve Bank. It's the government's equity. And certainly, it ultimately is an asset of the government. Now, beyond that, there is a question of how well capitalized the central bank should be. Now, like any entity, a corporation, which does deals abroad, the reason for adequate capitalization is for counterparties to believe in the strength of the Reserve Bank and to think that they will the Reserve Bank will honor promises it has made. For example, when we did the swap deal in 2013, it was a commitment by the Reserve Bank that it would honor those swaps. And without the kind of equity that we had backing us, it would be difficult. So the board, in my time, essentially decided that a viable sort of level for the Reserve Bank would be to have a AAA credit. Why AAA? Because India itself has a country rating of BAA, and so relying on the country rating would give us very high cost financing if we ever went out to get that financing. Instead, we should have a balance sheet which is itself cast iron and capable of raising money in dire need from outside with a AAA rating. So that was the decision of the board. And since then, we've tried to put out an analysis of what it would take to get that AAA rating. So that's one, the creditworthiness of the Reserve Bank. Second, what can it pay out as dividends? Well, the accountants, especially a really respected one like Mr. Maligam, who used to be on the board, told us that you cannot pay more than the realized profits. So that is number two. You have to realize the profit. You cannot just pay out what is not realized profit. So, for example, the gains on the assets, the unrealized capital gains, which is a big part of the RBI's equity, which comes from the foreign exchange assets we hold, we just can't pay it out like that. That's number two. The third, which is the least understood but perhaps the most important in constraining the RBI, is that every year it can only create so much money. Now, beyond that, essentially additional monetary creation would be inflationary. So every year we set ourselves a target, and that is the money that is used to buy OMOs in the market and essentially provide indirect second-hand financing to the government by clearing space in market balance sheets for them to buy government bonds. Now, the reality is that amount is limited. If today, let us say the government wants a 3 lakh crore dividend, and that can be realized based on the first criterion that there's enough in the balance sheet, and two, that we have profits which allow that payment, it still will hit the third criterion, that we can't create 3 lakh crores of additional money without selling government bonds in the market to take it back, because otherwise it would be inflationary. The bottom line is there is no free lunch here. There is no additional money the government can get, because whatever we pay will have to be taken back beyond that profit that we pay to them as dividends. So by all means, there could be a debate about whether the entire profit is paid or some is held back. My guess is that with the recent depreciation of the rupee, the balance sheet is healthy enough. Remember, we hold dollar assets. So the balance sheet is healthy enough that possibly the entire profit could be paid. But whether there's an additional windfall, I'm afraid that these constraints actually prevent that. I have tried explaining this many times, in speeches and so on. Unfortunately, because it involves monetary economics, it's a little harder to understand.
Okay, well, what if the board, see, in your case, the board said that the Reserve Bank should have AAA status. What if the board, there is a board meeting coming up on November 19th, if it told the Reserve Bank governor to hand over a part of the capital?
Well, so let's, I think, address the issue of what the role of the board is, right? The role of the board in the Reserve Bank has historically been not to take operational decisions, but really to focus on broader strategy as well as ensure good governance. So they are there to ensure the government's sort of money is well spent in the Reserve Bank, that, for example, the Reserve Bank doesn't pay itself inordinate salaries and so on, but also to serve as a sounding board, which is why we have people from different walks of society. Yeah. Very eminent people have been on the board, including Dr. Kakodkar, Padma Vibhushan, Ila Bhatt, whose work is known all over India. These were people on my board. And when they spoke, you listened because they had useful advice to give. They rarely tried to put themselves in the position of the professional sort of reserve banker and say, you must do this or thou shalt do that. Instead, we put proposals before them, and they weighed in saying, we would advise this or we would advise that. We'd go back and think and come back, and eventually they'd be fine with it. No, so my sense is the objective of the board is to protect the institution, not to serve as, to serve other interests. Yep. It is to protect the health of the institution, but also to provide wide sensible advice. Okay. Let me end by saying the aim of the board is to be a Rahul Dravid. Okay. Sensible, thoughtful, not with due respect, a Navjot Sidhu. Okay. Well,
I'll just come to this in a bit. I have to quickly get a couple of questions through you. The Reserve Bank, the government started consultations with the governor under Section 7 of the Reserve Bank Act, which has never been used hitherto. So it clearly looks like the government wants to have its way. Does that upset you itself, per se, the usage of Section 7?
Well, I don't think the government has used it so far, and I don't know how many times the usage has been threatened in the past. So I don't think we should read too much into this right now. Okay. I think certainly it would be best if each side respected each other's sort of motivation and thoughts. And ultimately, the Reserve Bank, after listening to the government and hearing what the government's issues were, provided the best professional answer it could. And historically, it has done that. I have no doubt it is doing that today. It has a responsibility to fulfill to the nation, and it has to listen, of course. But at the end of it, after listening, it has to make a decision because ultimately it has that responsibility. Yeah,
things apparently are much hotter than that. This is the information that we have got, that the government and the Reserve Bank and the board and the Reserve Bank also perhaps are not seeing eye to eye on several issues. Now, if on November 19th or earlier or later, the Reserve Bank governor finds that he's asked by the board to do something which he doesn't want to do, if there is a resignation, how bad can that be if the governor were to resign?
Look, I don't want to sort of address a hypothetical, and I hope that these issues are resolved. Ultimately, it can only be resolved if both sides respect each other's intent as well as autonomy. And I worry that in the recent past, a lot of unnecessary noise has been inserted into the board deliberations, and I wonder if this is something that can be unwound or rolled back, perhaps by taking away some of the people responsible for the additional noise. I think there is a healthy relationship, and in these uncertain times, and I think Dr. Acharya should be commended for just sounding a warning. I don't think that I've seen a lot of press saying he's comparing India to Argentina and so on. I don't think that was his intent in any way. I think he was just saying, let us be careful in these uncertain times. That's a warning that is important for us to heed, and heed it in the way it was given, respectfully, recognizing the the fact that the RBI is not above the government, it is an arm, if you will, of the government, and saying, look, as a responsible part of the government, it is my duty to warn that there are certain sort of issues if we go further. I think that we should take that into account. These are not good times to be labeled a country which doesn't respect the autonomy of the central bank. One of the things that, as I said, that on the macro front we are doing well on is inflation. If in fact there is the worry that the government could run roughshod over a central bank, as Dr. Acharya pointed out, in some countries, it hasn't, been a good thing for that macroeconomy. And so I think respecting that warning and understanding India is very different from many of these countries, we should not walk down that path. And I think it's important for both sides to back off, and for some, hopefully, elder persons in the government, as well as former RBI people, to create a better understanding between the two. Okay. And it may, again, I say, require looking at what has prompted this sort of recent angst and trying to deal with that problem. Okay.
Well, I believe I'm running out of time, but very quickly, Trump has criticized Powell. Theresa May has criticized the BOJ, the BOE governor. If things came to a pass where the governor didn't want to continue, will it be taken in that stride that in all countries, even in developed countries, these differences are happening? And will it be taken in the stride, or can it be very damaging?
No, look, I think you have to look at the extent to which institutions are protected in different countries. I think in the United States, for example, Mr. Trump simply does not have the ability to fire the chairman of the Federal Reserve. The chairman has been approved by the Senate. And to that extent, there's a much more elaborate and different process. I think in India there has been an unwritten understanding that, in fact, there will be a viable relationship between the government and the Reserve Bank governor, and that these things will not get to a pass where the relationship breaks down. I think it would be very unhealthy to ever get near the position where things go further. So I think as far as possible, it is in the interest of the country that we stay away from that we respect the institutional autonomy of the Reserve Bank, as well as the traditions. Ultimately, this is about traditions on both sides, and that we respect the traditions that have got us the kind of institution which I think the Prime Minister on the 80th anniversary was very, very appreciative of the quality of the Reserve Bank, and I think we should protect it as a national institution.
Well, I do hope the relation between the government and the Reserve Bank is not as infructuous and as difficult to solve as it is between the United States and China. Raghuram Rajan, it's always a pleasure having you with us. Thank you very much for joining us, and have a great Diwali and a great new year ahead.
Thank you. Same to you, and same to your listeners.
This little molecule can fuel vehicles. It creates less air pollution too. It's a natural gas. And bringing it to India is what we do. ExxonMobil.
May the new Samvat bring you Samriddhi, Santosh, Sampatti, and of course, satisfying returns from the Sensex. Here's wishing you a very happy Diwali to you and to all your loved ones.
CNBC TV 18 wishes you a profitable Diwali. Courtyard by Marriott presents CNBC TV 18 Disruptors at these times, only on CNBC TV 18 and CNBCTV18.com. Make this your most profitable festive season ever with CNBC TV 18. Take stock of market moves and make the right investing decisions with market-moving triggers and insights from the market masters. Get value investing ideas from the big bull of Dalal Street. Let India's top mutual fund experts boost your portfolio with the best-performing mutual fund picks. Maximize your money with unbiased advice and intelligent investing insights from India's biggest mutual fund managers. Celebrate this Diwali with the most profitable market makers throughout this week, only on CNBC TV 18 and cnbctv18.com. This is TV 18 and you're watching CNBC TV 18.
Days after the Central Information Commission directed the Reserve Bank, the Prime Minister's office and the Office of the Finance Minister to explain the action taken on the letter written by former RBI Governor Raghuram Rajan on the 5th of February 2015, Rajan has made an important clarification to CNBC TV 18. The CIC, while mentioning the letter in its notice, had called it a list of high-profile fraud cases of non-performing assets. In our exclusive conversation, Rajan has stated that the letter he sent to the PMO was a list of frauds and not of willful defaulters. He also added that he was not aware of what action was taken by the government on the basis of the letter. In fact, talking to CNBC TV 18 on the very same issue, the Information Commissioner, M. Sridhar Acharyu, has said that the CIC wants the government to at least disclose the action taken on the information provided by Rajan. Listen in.
Raghuram Rajan has furnished a list to the PMO,
right.
And then in the same year the order of Supreme Court came that you have to disclose what action you have taken on these defaulters. Yes?
This is the 2015
yes.
same order?
Yeah, that's what.
Right.
Then there is a similar RT application again filed.
Mm-hmm.
So what more you want? How many RTs you want? How many times Supreme Court has to decide that you have to disclose this information? Investigation process pending is definitely a defense. But to what? Regarding the conclusion of the investigation. But can't you share with the people that how much of loan was defaulted? Mm-hmm. That is the basis on which you are investigating now.
Well, that is the Chief Information Commissioner there on the order, which explicitly states that the government, the PMO, needs to disclose why it has not given out information on the basis of which action has been taken. The letter that was written to the Prime Minister's office by former RBI Governor Raghuram Rajan in 2015. The former RBI Governor has also spoken about the tussle between the centre and the central bank. Batting for the Reserve Bank, Rajan said the Deputy Governor Viral Acharya did not compare India with Argentina, but only highlighted the vulnerability of undermining a central bank. He also said that a lot of unnecessary noise has been inserted into the RBI board deliberations in the recent past. He added that he wonders whether if this could be rolled back by taking away some of the people responsible for the additional noise. These comments have given a new twist to the tussle between the RBI and the government ahead of the central bank's crucial board meeting on the 19th of November. The event gains more significance as a report from news portal Money Life suggests that RBI Governor may in fact consider submitting his resignation at this meeting or even ahead of this meeting. But let's listen in to the former RBI Governor Raghuram Rajan.
I worry that in the recent past, a lot of unnecessary noise has been inserted into the board deliberations, and I wonder if this is something that can be unwound or rolled back, perhaps by taking away some of the people responsible for the additional noise.
Well, that's Raghuram Rajan making a veiled reference to the deliberations at the level of the RBI board, where he says a lot of noise has started in the recent past. Joining us now to take this discussion forward is the spokesperson of the Samajwadi Party, Ghanshyam Tiwari, editorial director of the Business Standard, A.K. Bhattacharya, Congress spokesperson Sanjay Jha, and the BJP spokesperson, head of the economic cell, Gopal Krishna Agarwal. Gentlemen, appreciate you joining us here on the program. Mr. Agarwal, let me start by asking you, and there are several separate issues here, so I am going going to attempt to address them one by one so as to not confuse them. Let's go to the issue of Raghuram Rajan's letter to the Prime Minister's office on the 5th of February 2015. Now, Raghuram Rajan telling us that this was a list of fraud and not willful defaulters, and he doesn't know what action has been taken post his letter. The CIC, in its order dated the 2nd of November, and you just heard the man whose order it is on the channel saying that why hasn't the government disclosed what action has been taken? Fine, don't disclose the names, but at least tell us, where is the investigation, if at all there is an investigation? Where does that letter, what is the action that has been taken basis Raghuram Rajan's letter? Gopal Agarwal.
The issue is, I would not like to comment between what is happening between the Chief Information Commission and the RBI. These are two independent bodies, and their autonomy and independence is equally important for us as well as for the country. So they, for RBI and CIC, they have to answer among themselves. With regard to CIC's statement that what action government has taken with regard to frauds, etc., mentioned by Mr. Raghuram Rajan, the issue is well within the purview of everybody that already government has taken IBC code has been implemented, the NCLT process has been installed, Benami Property Act, which was just lying passed for 27 years.
I'm sorry to interrupt you, sir.
These are the actions against the fraud.
I understand that that's... No, I understand that that is the larger attempt of the government to try and initiate reforms to address the larger issue of corruption, solvency, insolvency, etc. But this is a specific question, sir, and there have been several queries that have gone to the government with respect to this letter written by Raghuram Rajan to the Prime Minister's office in 2015. Now the former governor is making it very clear that the list is fraud, not even willful defaulters, so the question of confidentiality agreements and so on and so forth perhaps will not apply here. Why has the government not given any information on what the former governor wrote to the government about? It's a simple question, sir.
No, Shireen, who has not given any information to whom? The question, Finance Minister has categorically said that there are deliberation, discussions, and there are letter exchange between the government and the RBI. Those are not made part of the public debate. It's a financial integrity of the whole system that is at stake, and a lot happens on the ethics and other things. The final decisions are only conveyed, and those final decisions I am again conveying. Finance Minister has conveyed, Prime Minister has said that what actions we are taking.
Mr. Agarwal, my apologies, sir. You are confusing the government statement which deals... No, sir. One second, sir. 1 second, sir. The government statement had to do with the current state of consultation between the RBI and the government, which has nothing to do with the Raghuram Rajan letter, sir. That's a separate matter, and I'll address that shortly.
No,
let me just quickly get this issue out of the way. Here is Raghuram Rajan saying something, now coming out unequivocally and saying it was a list of fraud. Sir, 2015 was when the letter was sent, and 2018 is when the CIC on the 2nd of November has put out an order saying the government ought to have at least made public what has happened with the cases that Raghuram Rajan alerted the government about. Simple question, sir.
No, but how can you make all the deliberation between two respected institutions, two parts of the government, to the public domain? It is whatever has been asked by the Supreme Court, government is giving. But you yourself see that there has to be a veil, and where the things have to be discussed, whatever deliberation, there are bound to be counter opinion on every economic agenda and issues. Even within the RBI, there will be, we can ask what happened in the board meeting of the RBI. Will it make it public, all the deliberations in the board meeting? What is the corporate governance RBI is following? They themselves have not come out with the minutes of the last board meeting. How they can question like this?
Okay, all right. Let me get the other guests in, and we'll move away from this topic.
You want the board meeting deliberations to be made public?
Sanjay, I'll come back to you, sir. I'll come back to you, sir, in just a second. Sanjay Jha, quick comment on Raghuram Rajan's comments as well as the CIC order, specifically on this issue. Don't confuse these matters with the larger issue pertaining to the RBI.
No, I think, it is a grave manifestation of the kind of opacity that is there in the government. Can you imagine, Shirin, that a letter written by a former central bank governor to the highest political executive in this country on people who have committed bank frauds or, or even in the list of willful defaulters? I mean, at the end of the day, that is a matter of public interest. I mean, this is taxpayers' money. Somebody is swindling the taxpayers' money is something that the Prime Minister should be more concerned about than maybe even an ordinary citizen or another ordinary politician. But this is a clear attempt, as I believe, to protect certain very high-profile people. I'm going to link it, Shirin, to the larger investigations that you don't hear about, the Panama Papers or the Paradise Papers. This is why we continuously keep highlighting the point that there is a lot of crony capitalism in this government. Raghuram Rajan is on record. Now the CIC is openly questioning this government, and they're coming out with the most duplicitous argument. I mean, I don't know what argument is the BJP spokesperson making here. I mean, it is on a very fragile ground. I mean, this is a matter of interest, by the way, Mr. Agarwal, not just for your party. It is not just about media and the opposition. I think every citizen in this country has a right to ask you, why are you not going public with this information? What are you trying to hide? And Shirin, let me add this point. It is not political.
All right.
But the BJP is destroying all institutions of governance in this country which are meant to be independent.
10 seconds.
It's RBI, it's CBI, it's the CVC, it's the Election Commission,
Mr. Agarwal,
it's
I'm coming
ED,
back
it's
to you,
income tax. Every institution has been destroyed.
10 seconds.
You've made your point.
It's a shame.
You've made your point. Mr. Agarwal, just let me, there are other two panelists waiting by very patiently, sir. I will come back to you in just a second. Hear them out and then I'll come back to you. Ghanshyam Tiwari, I'm coming back to you, sir. Just a second. Ghanshyam Tiwari, very quickly, your response on the Rajan letter.
Well, first and foremost, a very happy Diwali to you, everyone on the panel and every one of your viewers. Diwali is about inspiration of victory of truth and the aspiration of prosperity. This letter is about frauds. People who committed frauds on the taxpayers, on the banks. It was submitted to the PMO. After 3 years of this letter getting submitted to PMO, the primary action would have been that these fraudsters would have been in jail. That today Raghuram Rajan says he does not know what action has been taken means that no action has been taken, because this action had to be exemplary.
We can't assume that.
I'm saying because the action had to be exemplary given the nature of frauds, scale of frauds, and it had to be visible. It had to be individualized. That hasn't happened. PMO sits on this letter. They try to bank on the confusion between fraudsters and willful defaulters. Did not speak a word means that they did not take action.
Okay. AKB, you've heard what the politicians have had to say on the debate. You've heard what Raghuram Rajan has said as well as the CIC orders, sir. On balance, your quick comment on this one, sir.
Well, it is very clear that we do not know enough on this matter. But what we do know from what Mr. Rajan has said and what the CIC has said are the following two things. One is that the government had, from Mr. Rajan's statement, had a list of fraudsters, bank fraudsters with them, and from the CIC statement that the action taken report should be made public. Now, at what stage is that operation within the government on finding out or detecting the fraud? At what level is it there? 3 years have gone by. So it's actually probably incumbent on the government, as well as this notice is apparently to the current RBI governor. So to make clear that what is the state of investigation into those fraud cases. So I think it's a very fair demand on the part of CIC to make that public, and we can hope that the government will make the state of those investigation public. So I think, more than that, we don't know enough. So, I mean, we do not know the full list that Mr. Rajan gave to the government. We do not know what is the investigation process, whether it is still sub judice or not, whether it is still some legal processes are still being undertaken. So therefore, till a finality is reached, we still don't know. But I think the CIC's order is very clear. The CIC is asking the government and the RBI to make that action taken report public. So I think the fair comment,
Exactly. And that is... That is what the CIC has told us in his interview as well. He's saying, fine, don't disclose the names if you feel that that is something that you're not comfortable with, but at least give us information on what has been investigated, where the investigation lies. Quickly, Mr. Agarwal, a response to that before we move forward.
The issue is that just Mr. Rajan doesn't know what action has been taken, doesn't mean that the government has not taken action on it. The issue is we are giving
no, sir, the
so
CIC,
much priority
sir, forget
to
Mr.
what
Rajan.
Mr. Rajan has
No, sir,
saying.
forget Mr. Rajan, sir. I'm not giving priority to what Mr. Rajan is saying. I'm saying, look at the CIC's order. The CIC's comments I'm asking you to respond to, sir. Forget Mr. Rajan.
Yes, on the CIC comment, I would like to say is that in the financial institution, it is the so many issues are involved, and integrity of the financial system requires that without any conclusive evidence, if you disclose things prematurely, then itself it becomes a self-proclaimed prophecy.
It can harm the whole institutions. Mr. Agarwal, I don't want to spend any more. I don't want to spend any more time.
I
don't want to spend any more time on this. But you know, could it not have been made known? Could it not have been made known? Were there 10 people on the list? Were there 20 people on the list? Were there 50 people on the list? Out of the 50, if at all that was the number, how many people where the investigations have already started? I mean, that's the information. I don't know. 50, I don't know, sir. I don't know how many people are on the list.
12 people are under the NCLT. Shirin, 12 people are already under the NCLT.
NCLT is separate, sir. Please don't confuse this with the NCLT. Sir, NCLT is different, sir. Please don't confuse fraud with the cases in the NCLT, sir. Mr. Rajan has specified the list he sent were list of fraud. It has nothing to do with the NCLT. But let me move ahead and let me go back to Mr. Bhattacharya. AKB, let's now talk about the larger issue of what former Governor Rajan has addressed, and that is the current state of relationship between the government as well as the state bank, as well as the central bank. Now, there's a lot being placed on this board meeting that takes place on the 19th of November. What do you make of it? Because if I look at what Mr. Rajan is saying, he says the RBI board does not take operational decisions. The RBI board focuses on broader strategy, ensures good governance. He also goes on to say that a lot of unnecessary noise has been inserted in board deliberations in the recent past. In fact, he goes as far as to say that if there were a way of being able to unwind the decisions that have led to the noise in the board meeting at the level of the RBI, it would perhaps be for the best. What do you make of that, and what are your expectations from the 19th of November?
Well, you know, once the government has sent out a notice to the RBI governor under Section 7 for consultations, which is the first part of the requirement under Section 7 before the government can issue directions, I would imagine that the arrow has left the bow, you know, in a sense that the government will have to discuss and consult with the RBI governor on the issues that they have raised. Now, and I am expecting that the board meeting on 19th of November, the government will continue to highlight the demands or the expectations, government's expectations that have been raised in those letters to the RBI governor at the board meeting. I think the government is very clear that it wants a discussion with the RBI board. And the RBI board has not just the government nominees, it has got many other representatives, including some leading industrialists like like Mr. Chandrasekharan of TCS, Mr. Dilip Shangvi of Sun Pharma, and Chandra so there is a wide range of people. So I think the government is very clear from what I could make out from the latest reports, is that on 19th of November, the government would like to impress upon the RBI management that all the deputy governors and the governor are on the board. So I think government representatives will make a case for the RBI management to listen to the points that they are making, which were mentioned in the October 10 letter under Section 7 that was sent to the RBI governor. So I think it will be a kind of a stormy meeting like the one that you saw on 23rd of October. But the situation is is quite, tense. It's a tense situation. You haven't seen this kind of a thing in the past.
Yeah.
I do not know how it will really pan out. It all depends on how the RBI governor takes the tenor of that meeting.
Right.
So it's not very clear what will happen after November 19th. But what is clear is till November 19th, on that day, the government will once again impress upon the RBI board and the RBI management particularly to listen to what it has said in those 3 letters.
Right. In fact, that's exactly what Raghuram Rajan has also said in our interview. He said that the government should make the case to the Reserve Bank and then let the Reserve Bank decide. Once you have appointed, and I'm quoting the former governor, once you have appointed the governor and the deputy governors, you should listen to them. Mr. Agarwal.
The issue, Mr. Raghuram Rajan himself is saying that the RBI has an advisory role. It has a role with regard to monetary policy, and the government has a larger role of managing the economic development. The accountability of government is higher than to the public, and its elected government is ultimately higher. So I think, and Mr. Finance Secretary, Mr. Garg, has said that we want to discuss with RBI several of the issues, our concerns. When the question is whether RBI is coming to discuss, and will it take its advisory role higher to that what we advise you have to accept. This is the question. They can advise. It is for the government to accept it or not. And larger monetary policy have to integrate itself with the larger economic policies and goals of the whole economy. So it is, I think the question is of supremacy than of autonomy. It is the supremacy of the institution. If their advice is not accepted, our autonomy is being hindered. This is not the way the government functions. There are so many issues, there are so many institutions. Ultimately,
so
elected government has to take cognizance of all advices and take a decision.
So
it's an autonomy and the name of supremacy. It is supremacy in the name of autonomy that they are asking.
So you're basically very unequivocally saying that the government's writ must prevail over the Reserve Bank of India, that the government is supreme, autonomy of the Reserve Bank is secondary. The government's writ must prevail. That's your point.
No, it is not secondary.
Okay. Well,
difference of opinion doesn't mean that there has to be accepted. And it is not the autonomy that is being hindered. It is
difference of
that
opinion.
our advice is compulsorily has to be
I'm asking
seen.
a separate question. I'm asking a separate question. You're saying that there is a difference of opinion. It is very clear that there is a difference of opinion. But if the difference of opinion continues, whose opinion should matter? Whose opinion needs to be taken forward? The government's or the RBI's?
It is the government finally, because RBI has an advisory role and it has a limited role, mandate or monetary policies. And this kind of situation had prevailed in previous governments also, where there was consensus, and this government is giving more space for debate and discussion. Otherwise, it could have simply said that this is to be implemented.
But sir, just factually, sir, no other government in the past has even gone as far as to invoke the first step of Section 7. No direction has been issued yet, but Section 7
Mr. Jawaharlal Nehru's and TTK, Jawaharlal Nehru and that governor.
Okay, all right, okay.
No.
Okay.
He had to resign.
Sanjay, before we go back to the
Nehru's
Nehru era,
letter has come out.
Okay, all right. Right. Before we close, Sanjay Jha, you've heard what Mr. Agarwal has to say there, making it very, very clear that that the Reserve Bank's mandate is monetary policy and that the government reigns supreme and the government's writ will override any issues of autonomy, etc., in the larger interest of the economy.
Well, I think these are very disturbing messages, Shirin. You heard it from Mr. Acharya. I think Mr. Raghuram Rajan's interview, he talks about why there must be operational autonomy given to the Reserve Bank of India. But, as the reports today suggest that, the government in fact has intentions of even dipping into the reserves of the RBI. Now, these are all very authoritarian manifestations, and they're not good at all. I mean, if the central bank, by the way, has to look after your FX markets, it has to look at what are the risks on not just currency, but externalities in terms of oil prices. Everything impacts, the kind of decisions they have to take. But, for the way this government seems to be treating the RBI, I think it's a matter of great concern. And, I think, remember this, Shirin, that India, all central banks are watched by global investors, because the message is a lot more from the central bank than the stock markets, because the central bank, like how we look at the US Fed in terms of their quantitative easing or the way they will increase rates or whatever, the fact remains that to treat RBI as nothing but targeting inflation as their only function is to actually cramp their style. I mean, they have a viewpoint, they have an issue in terms of the NPAs. They are concerned that is the government going to take the reserves of the RBI to recapitalize banks, and they have been very clear that that is not government revenue. You are not creating additional revenue. You are basically only kite flying in terms of your internal finance, and ultimately it is going to be used for reducing your fiscal deficit, which means the government is conceding that it can't run an economy. It is dipping into what I would call as a cash cow.
All right, Ghanshyam Tiwari, very quickly, we're getting out of time.
Well, we are lucky that on RBI we are only talking about Nehru era. In my state,
Shirin, 10 seconds to me also.
Dashrath era. As far as RBI's situation is concerned, we are talking on the backdrop of 2-year anniversary of demonetization, where it is still open whether RBI took that decision or whether the government took that decision, and how it impacted RBI as an institution. My third point is that the RBI board, I would like to translate what Raghuram Rajan was saying. Raghuram Rajan was saying in plain words, people like S. Gurumurthy are noise pollution on RBI board. They do not add value. They overreach their brief, and as a result, they confuse the already conflicting situation between RBI and government. And it is important that when there is a board meeting that is due on November 19, such people should restrain themselves, or government should restrain them, the government that appointed them. And it is for us to see. We cannot have a situation where the previous RBI governor, who is very respected central banker, is in some way criticizing the government, and the current RBI governor, the press report is that he has his resignation in his pocket. This situation does not help the government at a time when the economy is in question.
AKB, you've heard what the BJP spokesperson has to say, and I don't know whether that is in fact the thinking within the government at this point in time. It may very well be. If that is in fact the case, that the government's writ should override the RBI's view, where is it going to lead to?
Well, as I said in the beginning, that, the arrow has left the bow, in a sense that the RBI is by law responsible for financial stability in the country. So what is right now happening is the government has taken the first step under Section 7, which is consultation. And I, frankly speaking, will be very surprised if the government steps back from that first step of Section 7 and does not go to the next step of consultation, which is issuing directions.
Which is direction.
Unless RBI team is convinced by the government's arguments at the November 19 meeting. So, which is very unlikely. Now, if that happens, the government will be left with no option other than issuing directions. So, which actually, in a way, will make it very clear the government will be held responsible for the actions that it forces on the RBI. So at least that much transparency will be there. The government has tried to convince the RBI management of what it needs to be done. It failed, and therefore, under the law, it issued direction to the RBI, which will I think from many months to come, people will debate whether RBI autonomy was curbed but whatever has happened is unfortunate. It shouldn't have been handled the way it has been handled so far.
Mr. Agarwal, I'll give you the final 10 seconds. Would you still hope that a middle ground can be achieved, or do you believe that directing the Reserve Bank to act as per the government's wish is the only way forward?
No, I think we respect the autonomy and independence of the RBI, and that is why we have put up a MPC, where it has been just government had conceded so many things to the MPC, and it's an independent and transparent body which is taking cognizance of both views and taking decisions. So there is a representative on the RBI board. I think some of the people in the RBI are speaking out of turn, and it is basically more of a question of supremacy than autonomy and independence. Government wants consultation. There are difference of opinion in economic policies. There are various options which have to be considered, and their difference of opinion doesn't mean that you are imposing something on that. Consultation alone will bring out a consensus, and this consultation cannot be in an open public debate. It has to be what the finance minister has advised, that some of the people in the RBI should not talk out of turn and discuss on the debates and etc. Otherwise,
the
there are issues with
the government is also talking in the government is also speaking, sir. It's not just the Reserve Bank. The government is speaking or tweeting. Maybe I should caveat that it's tweeting. So it's all happening in the public domain. But I guess we'll know on the 19th of November whether consultation can lead to some consensus, or whether we will in fact see the government direct the Reserve Bank to act according to its wish. But Gopal Agarwal, Sanjay Jha, A.K. Bhattacharya and Ghansham Tiwari, appreciate you joining us here on CNBC TV 18. And from all of us here, wishing all of you a very happy Diwali.
Hello and welcome to this very special show. My guest is former Reserve Bank Governor and Professor of Finance at Chicago Booth School, Raghuram Rajan. Dr. Rajan, thank you very much for joining us. A very happy Diwali to you.
Very happy Diwali to you, and happy Deepavali to your southern listeners.
Okay, thanks a lot for that. Well, first up, let me start with things global before I come to things Indian. We seem to have a dichotomous growth. The US is chugging along with excellent job creation, while we're seeing the IMF marking down growth in Europe and, more importantly, in emerging markets like China. Do you think we are going to have this two halves growth for some time now?
Well, I think initially we will have that because the U.S. has the benefit of a substantial fiscal stimulus, which is going to take it growing into next year. However, the world is so tightly integrated that if one part slows, the other part eventually does also slow. So my guess is by the end of next year, when the stimulus has fully worn off, I think you will see the U.S. coming back to earth.
Okay. What about interest rates, though? I mean, we've got such good wage numbers and job creation numbers coming out of the United States. Amazon is raising wages. That's telling you something about global inflation. What's your sense about interest rates and about global liquidity? Will it continue to get tighter for emerging markets?
Well, the latest job numbers, as well as wage growth, 3.1% year on year, will suggest to the Fed that they should continue on their path of rate hikes. So my guess is that they, at this point, are set on one more this year and maybe three more next year. What this means is monetary policy is going to get tighter the world around. By the way, the ECB is also going to stop its QE by the end of this year. So except for the Bank of Japan, which is still pretty much set on its very accommodative policies, the rest of the world is starting to tighten. So both in terms of interest rates as well as liquidity, things are going to get more difficult as we look ahead.
Is this bad news for emerging markets? You know, last time around from 2003 to 2008, as the Fed started tightening, it also meant good US growth and therefore EMs prospered. Will it work that way, or will this not work that way positively for EMs?
Well, there is a difference this time, which is that part of the spectacular U.S. growth is driven by a near end-of-cycle fiscal stimulus. So one of the worries that people have is as the Fed tightens, it's tightening given the very strong growth in the U.S., but that growth may not last because some of it is fueled by a stimulus. That said, I think it's premature to say that this tightening process will necessarily create enormous problems for the emerging markets. It typically does, but markets do tend to differentiate between well-managed emerging markets and poorly managed emerging markets. So I think it's extremely important, especially for India at this time, to have really spectacular numbers on the sort of macro stability front, so that emerging markets look at that and say, this is a well-managed economy, and we are treated with respect in the difficult times to come.
How would you assess the Indian macros at this point in time? After hitting trade deficits of 18 billion for a couple of months, we have come down in September to 14 billion. The fiscal deficit, at least efforts are being made to stick to the number. Do you think we get a tick mark? Do you think the instability on the currency is behind us?
Well, I think there are some places where we have done a good job. Certainly on the inflation front, we are in a much better situation than in the past. And I think both the government and the Reserve Bank deserve credit for keeping inflation low. I think the other aspect that is generally good is we do seem to be growing faster than most other countries. Of course, from the perspective of the level of our GDP, as well as what we need to create the jobs to keep our youth employed, we probably need somewhat more than where we are today. Where there is more worry is on the fiscal deficit front, and here I'm not talking just about the central government fiscal deficit, which has been coming down, but the aggregate fiscal deficit. Even as the central government is bringing it down, the states are taking it up. When you look at the total, you find that over the last 3 or 4 years, the aggregate fiscal deficit has actually gotten slightly worse, not better. And the second, I think, big problem which we're facing today, of course, is the current account deficit is blowing out, partly because of relatively weak exports, and partly because, of course, the price of oil has gone up. It's come down recently, but it's a risk that we cannot ignore at this point.
What about the debt problems that we are facing? I mean, you may be up to date with the fact that there is a lack of trust in several NBFCs, especially housing finance companies. Do you think this can become a very big issue? STEMI growth itself?
Well, yeah, I mean, look, I think there is concern in the corporate debt markets about the caliber of the rating agencies, as well as who has good balance sheets and who has not. I think this is a good time for those entities that have relatively weak balance sheets, especially if the debt they've taken on is not yet due, for them to shore up their balance sheets. Typically, this means issuing equity so that they actually can put some backing behind any possible weak assets that they have. I think the markets are somewhat nervous. But I don't think, given that NBFCs account for 17 to 18% of assets, that this is an unmanageable problem. I think we can manage it. We have to look carefully at it, see what is really a solvency issue, what is a liquidity issue, and certainly on the solvency front, it's up to these privately managed entities to raise equity at this point when they still have the capacity and shore up their balance sheets. I think there's a tendency sometimes to run to the government and say, please bail me out. I think first they have to exhibit everything they can do on their own before the government even contemplates anything of that sort.
Well, I don't know how much you're updated on the showdown that this has created between Reserve Bank and government. Now, one of the demands of the NBFC sector and those who see that problem as possibly contagious is that the Reserve Bank should provide not just general government security liquidity through OMO, but must specifically provide a line of credit or some kind of comfort to NBFCs. Is that possible at all for the Reserve Bank?
Well, I think in general, let me talk about central banks because the specific issue I may not be the best informed on. But in general, central banks avoid lending to direct entities because often that requires a level of credit evaluation, which simply central banks do not have and should not presume to have because they're not in the fiscal function of bailing out entities directly. Of course, in a generalized crisis, they sometimes enter in a big way. The Fed did. The RBI has done in the past. But I think before that, you have to ensure that this is really a liquidity problem. If it's a liquidity problem, the central bank can flood the market with liquidity or give liquidity to specific private entities that are healthy and that are willing to lend to these other entities that are in trouble. If they're willing to lend at a particular price, that suggests that it is a liquidity problem and they're willing to fund these entities. If nobody is willing to lend to these entities, that means it's a solvency problem. If it's a solvency problem, then, of course, there's a fiscal function involved, and typically the government should get involved in that rather than the central bank.
Okay. It's...
in other words, when you bail out private entities, it requires a serious thinking on what exactly it is.
There is a severe disagreement between the government and the Reserve Bank on the liquidity issue for the following reason, that 11 banks have been put under prompt corrective action with three filters, either because their capital is not up to the Reserve Bank's requirements, or because they have higher net NPAs than 6%, which means they have not provided for their NPAs enough, or three, because they have negative ROA. Now, the government's position has been globally prompt corrective action is resorted to only with a capital filter, not with net NPAs and ROA filters. What would you say is the correct position?
Look, I don't, again, want to enter into the specifics of the debate. Let me tell you broadly that I think there is a little bit of a misunderstanding in this debate about what the RBI is supposed to do. I think the analogy, Dr. Viral Acharya gave the analogy of T20 versus test match. But let me give you another analogy. The RBI is something like a seatbelt. As a driver, the driver being the government, it has the possibility of not putting on its seatbelt. But of course, if you don't put on your seatbelt, you get into an accident, the accident can be quite severe. So most drivers listen to that annoying noise which comes when you don't put on your seatbelt and actually put on the seatbelt because they know it's for their own good. And historically, the relationship between the RBI and the government has been precisely this. The government wants to focus on improving growth, and it does all it can within the limits set by the RBI, which are set based on financial stability. So the government will try and get the RBI to be more lenient. And there were innumerable letters, both from industry as well as government, which came across my desk saying, please relax this, please relax that, please relax something else. And the understanding was we would examine that in close detail, see what the risks to financial stability were, and then say yes or no. When we said no, the government understood this crossed the Lakshman Rekha in some sense of stability, and that we would be held responsible. We have responsibility for financial stability, and therefore we have the authority to say no. They would respect that and come back the next day with another letter saying, what about this, what about that? And we'd keep examining all these possibilities. This has always been the relationship between the RBI and the government. And if you recall, I think there was this anecdote by Dr. Subbarao when he talked about this phone call between Dr. Reddy and Mr. Chidambaram. And he was listening to Dr. Reddy's side, and Dr. Reddy said, no, 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 and finally said yes. And he said, what were you saying? He said, well, Mr. Chidambaram was asking for this and that and something else. And I kept saying no. So why did you say yes? He asked me at the end if I could hear him. And I said yes. So, that's the notion of the relationship between the RBI and the government. Of course, the RBI doesn't say no out of petulance. It says it because it has examined the situation and believes that this implies too much financial instability. I think that relationship has gone on for long. And, the fact that the RBI says no is not new. Now, the government can keep asking and say, please consider this, please consider that. But at some point it says, okay, I respect your decision. You are the financial stability regulator, and I back off.
Okay. But the other point in which, we don't get into the details of prompt corrective action. But one general rule which the Reserve Bank has applied is 9% capital adequacy, although Basel requires 8%. Now, Deputy Governor Vishwanathan just the other day explained in detail that Indian risk weight calculations are looser than that of Basel and global requirements. Be that as it may, the government's contention has been, why are you trying to be stricter than what Basel requires? Why don't you lower it to 8%? Even in your time, it was 9%. So what's the Reserve Bank stand there?
Look, I think the Reserve Bank takes a view based on how it sees the Indian economy. If the Reserve Bank follows blindly Western practices, the Reserve Bank gets accused of being in the thrall of the West. There are people who've made those accusations. If, on the other hand, we tailor to Indian conditions, we are asked, well, why don't you tailor to Western conditions? I think you can't pick and choose which regulation you like and which regulation you don't. There are many places where the Reserve Bank is actually more lenient than Western regulations. I think we repeatedly had Indian banks getting into trouble, for example, in Singapore, because Singapore said they weren't meeting Singapore standards, while in fact they met Indian standards. And we had a lot of back and forth about this. We are not necessarily the strictest regulator. I think that's a problem, that we are not actually as effective as we should be, and we're making progress in this path. But I don't think there's much to be gained by pointing to one regulation and saying this is looser or that is looser. Again, make the case to the RBI. The RBI will decide, but ultimately the responsibility for financial stability lies with the RBI. Once you've appointed these deputy governors and governor, you have to listen to them because that's what you appointed them for. They're your safety belt.